Good evening, everyone. This is James coming to you from Dividend Stock Talk, where we talk about dividend stocks for monthly and weekly cash flow. Today is Tuesday, August 22nd. It's 11:44 p.m. You would think by now I'd get down pat and get some decent hours to get this thing done, but apparently I squeeze it in when I can. All right, let's jump in and see what's happening this week. A lot of interesting, fun, exciting things. And what do we have? All right, we're still holding on to Colgate Palmolive. We seem to have gone up a little bit today, 250 bucks up for the day today. Nice, I like that. Colgate Palmolive, let's start out and see what they're doing to give you a kind of background. Colgate Palmolive starts the year off in $74 area. It trades for a couple of weeks and drops down to 72, trades for about a month and a half, and it drops down to 66, where it trades for about 3.5 months. Jumps back up to 73, 74 area, drops back down to 71, makes a high of the year at 77.24, goes sideways for about a month and a half, 2 months, slowly takes a dip to the 71 to 73 area, where we are today. Now, we got 5,000 shares back in July 1st, and this thing has not been acting the way that we wanted it to. As you see here, we bought the 5,000 shares on July 1st, which I normally don't do in this trading account because we have several different accounts to test out different trading strategies. This one is specifically options. And what we do is we do a lot of credit spreads and debit spreads, because if the stock is going to stay the same or go up, we're going to make money with it. So we can make money in 3 different directions with this one. The stock goes up, we make money. The stock goes down, we make money. And the stock can stay the same and we still make a lot of money. But it just so happens we got caught with our pants down with this one. Instead of getting out of the position, we took possession of the 5,000 shares. So since July 1st, every week we've been selling covered calls, bringing in anywhere between 0.5% to 1.5%. Now, 0.5% is about $500 a week. 1% is about $1,000 a week, which is not bad. I mean, if you think about it, 1% a week comes to what, 55% a year, 56% a year. 0.5% a week is 26% a year. So depending on what you want to do and how much time you want to spend perfecting your trading strategy will really depict on what it is you're actually going to do. Because there's so many different ways to make money in the stock market. It's just racks the brain thinking about it. All right, that being said, that's my key phrase. My key phrase, you know, kind of like Arnold Schwarzenegger, I'll be back. Mine is, with that being said, all right. All right, so that being said, this is just one of the trading strategies. In this one, we use the dividend stocks to do credit spreads and debit spreads. Now, we are doing covered calls until we get out of this position. The other 3 accounts is, one is just strictly dividends, where we just buy the stock, collect the dividend, and move on to the next stock. Don't hold it, we just collect the dividend, dividend capturing. Buy the stock before the EX date, hold it through the date of record, sell it after the date of record for a small profit, collect the dividend, be onward. Another one is a dividend on steroids. We've found that a lot of stocks that we invest in have a tendency to move up just before the EX date. 10 days is the day that we look at prior to the EX date. So if the EX date, I'm going to show you that in a minute, but you buy 10 days prior to the EX date and the stock moves up because all the other investors coming in to buy that stock to collect its dividend. That we use to collect a small portion, like 2.5%, and then we're out. That one's working very well this year. However, the 4th one, I believe, was double dividends. That's when the stock moves up twice the value of the dividend. Oh, wait a minute, no. And there's dividend investing, where we look at the stock 10 days prior to the dividend date. We set the target at the purchase price plus what the dividend would be. So rather than waiting to collect the dividend, we get the run-up, which is equal to the value of the dividend date. Now, this allows us to avoid taxation or higher taxation because your dividends are taxed as regular income. Now, if you're just buying and selling, it's taxed a little bit differently because it's not quite dividend income. Anyway, new tax law, gotta find ways of getting around it. So there's several different strategies, so you gotta find one that you're comfortable with. The simplest and easiest one is dividend capturing. Buy the stock before the EX date, capture the dividend, sell it after the date of record for the same amount of money you paid for it or a little bit more. That way you're capturing the dividend, and a little bit more should equal to the amount of whatever your commissions are. So it's just like getting 10 or 20 checks per month, because depending on how much money you have and how much effort you want to do this, you can do it quite handsomely. We've came up with this strategy over 10 years ago, 10-minute trader, where you can spend less than 10 minutes and still make more money than most professional traders. I tell people double-digit returns, and double digits could be 10%, could be 11, 12, 25, 35. Anyway, that being said, let's get back to where we were. All right, so Monday was an up day. I always like up days, especially with the stocks that I hold. She opened up at 71.08 and she closed at 71.61. Today, the market maker was trying to force it up because she opened up at 71.68. However, she did hit a high of 71.96, but she couldn't hold on to that. And then she ended up closing at 71.64. Which is still higher than the close of yesterday. So that's still good. So it's still an upward tick. Now I'm looking to get rid of this at 74 by the end of next Friday. If I can get rid of it sooner, hey, that'll be great. All right. Let's find out who we got to look at this week. Now, we want to look at 10 days prior to today. And today is the 22nd. So let's jump ahead and see who is trading. It would be the first week of September. And there you have it. Okay, so the first week of September. Yeah, 4 companies on Monday. Yep, those aren't really companies, and that's not real money, Not even 10 cents. And what is that anyway? Casey Hutchison Holdings is paying not even 10 cents. 6 cents, no thank you. Half cent, no thank you. Sorry, that's 5 cents. That's a half cent. No thank you. Tuesday, only 1 company, and they're paying 4 cents. No, thank you. Wednesday, we got 15 companies, all paying dividends. Thursday, good luck with that one. 60, trying to find out who's the best there. That ought to be fun. And Friday, 18 companies. So let's take a quick look at what we got for Wednesday. Now, before I do that, I don't want to look at everyone. Okay, I really don't. I only want to look at who has weekly options, because that's what I'm trading right now. And Mosaic, it's the only one. It's 15 cents. This should be a relatively quick video because Mosaic is just 1 company. All right, and that don't look very happy. All right, Mosaic starts the year at 28. Travels about a week that way, and then drops down to the 23, 24 area, heads that way for about 2 months. From there, it's a slow, painful uphill battle to 34.42, which is the high of the year. From that, it's kind of like a quick drop in a week down to 29, trade about a month at the 29 area, drop down to 27, trade a couple of weeks there, dropped down to 23 and just gone sideways for about 4 months until she drops down to the $19 area where she is now. That looks like it's falling like a rock. However, can we find that the $19 area or the $20 area is a new low support? It could be. You never know. It could be. It's the low of the year. Okay? But I don't want to fight the trend. If the trend says it's going to continue going down, I don't want nothing to do with it. However, we don't know until it actually happens. Now, we're going to take a look at the seasonality real quick to find out what's happening there. Okay. And this could be the bottom, because as you see, this is where we are now. Okay, this is the blue line. This is this year. And this is a composite of all 10 years, past 10 years. You know, last year, the year before, the year before, blah, 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 all that kind of stuff. Okay, she's going to go sideways for the next couple of days, then she's going to go upwards. That looks good. Okay, so let's see what Mosaic is actually paying. MOS. It reminds me of the old rap song, M-A-S, a T-E-R, a G with a double E. Okay. MOS, which is Mosaic. Let's go back to the regular chart. Standard, here we are. Now, she's in a downfall from 24 down to 1996, 1993. It's it's $20. Who's kidding who? Unless you're buying a couple million shares, 1993 is $20. Okay. Now, I want to look at the spreads, the vertical, which is debit spread or credit spread, depending on where you buy it or where you sell it. All right, 1994, so we look at the 19.5 and 45 cents. I don't want to invest money for a nickel, I don't want to pay 45 cents for a quote, for 50 cents. That just doesn't make sense to me. So that's not looking good. Now this here, the 19.5, 20, I'm going to wait till tomorrow to find out what this stock does. Because the only way to make money with this spread right here, the 19.5, 20, the stock has to move up. And if you've been following me, I don't like to be put in that position. I want to be in a position where I make money if the stock moves up. I want to make money if the stock doesn't move at all. And I want to make money if the stock goes down a little bit. Not a lot, little bit. So this is not it. The 1950, this right here, this spread, that would do it for me. However, I'm not willing to pay 45 cents for a 50-cent move. Anyway, that being said, it's 11:57. Don't have anything else to show you today because there is only one. Tomorrow we're going to look at 9 different companies. But today, only one. See if I have any questions. If not, I can be out here early. No questions. Hey guys, if you're on, you're watching, and you're live, ask a question. You want me to look at one of the stocks, give you my opinion on it, give a quick analysis of it? Fine, I'll do it. But you don't ask a question, I can't answer it. That being said, I'm done for the day. You guys have a great day, and I will talk to you tomorrow.